Thank you. Thursday night, they came out with what they call an interim final rule, which had some modifications to it, including the interest rate when this was originally introduced is going to be 4%. Then midweek last week was 1/2 of 1%. And then the rule came out that it was 1%. And as this thing has kind of percolated, I'm sure you heard over the weekend and even yet today, some of the larger banks are just pulling out of this program altogether due to the complexity. So I think when you think about this issue, I'd encourage you to think about the challenge. Certainly you guys as business owners have your own challenges and totally respect that, but the industry is they're trying to figure out how to make all this happen when there's not clear-cut rules and guidance and regulation. So the industry is trying to work through that. Specifically to the question about forgiveness. So generally speaking, if you get this loan, at the end of 8 weeks from the date of the loan, you will more than likely go to your bank and say, hey, I've met the requirements of the PPP program. I would like to have my debt forgiven. Well, there's rules around that, and to be honest with you, the banks right now aren't thinking about how the forgiveness of debt is actually going to get processed, because we're all just trying to get the program up and going. But the one thing that I encourage you to do is really become familiar with the program and keep really good, clean, tight records about your payroll, about the people on staff, how you spent your money, because at the end, if you want this loan to be forgiven, you're going to have to document that at least 75% of the proceeds went to cover payroll. The other 1/4% or 25% could cover rent, mortgage, utilities, and other type things. So at the end of the 8 weeks, it's my understanding you can go back and go to your bank and say, hey, I'd like to apply for forgiveness. The process is going to be independent of each bank. But like I said, just keep all the records you can, and we'll all figure it out together. And each individual bank will come up with a process about, so if you want this loan forgiven, here's what we need from you, but keep a lot of records.
Thanks, Frank. And I think a good call out there is with the PPP loan, so the Paycheck Protection Program, that you'll be working with your current bank and your current lender on how to process that particular application, as opposed to the EIDL, which is actually done via the SBA's website, which we'll get that if we have it on our website, but hopefully by the end of this, I'll be able to post that in the chat session or the Q&A session, so you have that. But yes, with the PPP program we're talking about right now, that is through your individual lender. Mark, you got any thoughts on, when are we going to know if this becomes a grant and it's going to be forgiven?
So just kind of piggybacking on what Frank mentioned, the concept here is you have to meet certain criteria, okay? And if you meet the criteria, then that portion of the loan can be forgivable. One of the nuances that you want to at least keep in mind is with respect to indicating that 75% of those expenses need to be allocated towards payroll. Well, from as best I can decipher, it appears that payroll needs to have been paid. So if we're saying that we incurred payroll, that's going to be different than having actually paid the payroll to your employees. So that's one of those nuances that we're going to want to kind of keep an eye on as we move forward. The payroll expenses specifically relates to those costs that you pay for wages. It also relates to costs that you incur as an employer for health insurance or other health-related costs that you incur for your employees. It also includes costs that you incur as an employer in matching for a retirement type of plan. So any of those costs would count as payroll costs. There's still some nuances and things yet to be determined with respect to if you're being afforded loans for, if you're self-employed. Those are things yet to be worked out. But specifically with respect to payroll, the key that I guess I would want to make sure that you keep an eye on as an employer is making sure that those costs are actually paid within that 8-week period. So you may want to kind of keep an eye on that. And if your payroll periods are normally every 2 weeks, you may want to speak with your accountant or just go back to your lender and confirm, are we talking about payroll costs incurred or payroll costs that were paid? It's my understanding that it's paid. And if that's the case, you need to make sure that you pay your employees and so that you meet that criteria. If you would have accrued, if you normally pay every 2 weeks and you would have accrued a week's worth and hadn't paid it yet, you might want to actually consider issuing payroll within that 8-week period. So I guess that, to me, that would be something I would want to kind of keep an eye on as an employer.
Cohen, one additional really quick comment. Per the rules of the PPP program, the banks are they have 60 days, 60 days in which to determine forgiveness eligibility. So there's another 2 months that, depending on volume, so forth, about whether or not this can be forgiven. So I think it's important to set up the expectation that if you go in 8 weeks after the date and you make application, they still have 60 days to make that decision.
Excellent. Thanks, Frank. So a lot I've heard as well, since we're going to have to verify a lot of this, there's also going to be some accountability to where did the funds actually go. So if you receive the loan and you use it towards other things, how are you going to prove that that money went to the appropriate buckets, essentially? So I've been told in my world, if I get this loan, I'm going to have a separate bank deposit account and I'm going to put the money in there. And then I will issue the money out in chunks for payroll this week. Okay, great. I'm going to take that money out, put it in my bank account, issue payroll. 401k contributions, I'm going to do that. But we'll need to start having some idea of how we're going to track that. And when you listen to the banker talk and you listen to the accountant talk, it's very apparent that each one of us really need to reach out to our lender and really need to reach out to our accountant during this time to get their advice on how we need to process our application, as well as how we need to account for the funds once we receive them. But Lisa, to answer your question, we got to have some faith that this is going to be forgiven and going to become a grant, because ultimately what the federal government's trying to do with the stimulus package is keep people employed. So we're not letting them go. They're going to the unemployment line. This is a way to keep the economy moving during this time. So when things do bounce back, again, we can bounce back quickly. All right, we got a question from Rita, it looks like. Have loans actually been submitted yet? So I assume she means not just to lenders, but from the lender to the SBA for funds to be starting to be distributed. So I don't know if either one of you have any insight into are checks being cut to small businesses at this point?
I don't know if checks are being cut. I know there have been some submissions. There's different numbers floating around out there. As I said, the smaller community banks are probably progressing at using a more manual system. But right now, and like I said, don't quote me on these time frames and everything, but the SBA website has been down due to just the volume of inquiries, and everybody's learning how to submit and process these things in bulk, in mass. So I know some of them have been going through, and some frankly aren't yet.
Okay. We have a question, it looks like, from Brad. Boy, we're getting into the specifics here, so we'll see what we can do. His question is as follows. I own a small business registered as an LLC. I'm the sole proprietor with 5 part-time W-2 employees. I don't receive a W-2. My salary is listed on line 31 of my Schedule C. Do I include my salary amount of payroll expense when completing the SBA 2483 form? Mark, I might look more to you to answer that question potentially, so go for it.
Sure. So ultimately, that will factor into your calculation. Brad indicating that, oh, I just lost it. Brad indicating you have 5 employees that are part-time. So you'll do a calculation based on those employees and the payroll that you issue to them. In addition, you will add to that the net income that you're receiving on your Schedule C. So that will factor into the calculation. And ultimately, the portion that's forgiven, again, we're still waiting on guidance with respect to how that calculation is going to work. But yes, your loan will be based on net income that you're receiving from your business.
So again, I'm hearing we have to put faith and trust in the federal government to come through on what they're saying. All right, awesome. And Mark, by the way, if you click on answer, you can actually see the question in case Courtney moves it over too quickly.
Oh, thank you.
Yep, just make sure you go back to open. All right, we got another question from Rita. What if we're not open or don't have people back to work in 8 weeks? So those small businesses that close shop just because it's shelter in place, they're not considered an essential service, and all their employees are at home. And it could be a retail shop, right, where working remotely really isn't possible for them because it's all about retail sales and people in the store. How does that work for small business owners like that had to send everyone home? They aren't being paid right now because, one, we didn't know about this program until now, and ultimately there's still a lot of unknowns associated with it. So I don't know if that's a good one for Frank or Mark, but Frank, I'll just start with you if you have any comments on that one.
So, yeah, that's for clarity. So, that's an interesting nuanced question. The spirit of the program is to keep people employed. Nowhere have I read that a business needs to be generating revenue. You need to be keeping the people you have, or I believe you can bring back staff that you had and still qualify for the program. But it's my understanding that if you, regardless of revenue you generate, you pay those people that were on your staff or bring back people, to that payroll level, you would qualify. But that's a great question. Probably needs a little bit more research. Mark, what do you think?
Yeah, so from what I've read, as long as they hire people back by June 30th, they could still be eligible for participation in the program. Now, the portion of the loan that's forgivable, well, that can be a different story because, again, that's going to be based on the 8 following the date of the loan origination. So it may affect the calculation that you're getting for the forgivable portion, but you are certainly eligible to continue to participate in the program as long as you hire people back by June 30th. You can hire them back. Shucks, if you hire them back the date of loan origination, then everything would be going basically along those lines of all of that would then still qualify for forgiveness. So yes, everything I've read would indicate that you are certainly eligible to hire people back, even though you may have laid them off previously, and you'd be eligible to participate in the program and the loan forgiveness portion of the program.
Excellent. Thanks, gentlemen. All right, we got one from Betsy. Mark, can you talk more about the new employee retention credit program through the IRS while we're on the topic of payroll? It's not a loan, but it's worth talking about here.
Okay, so I'll say first of all, this was also part of the CARES Act. It's a credit that employers are eligible for. However, the credit is not available to any employer that's participating in the PPP loans. So if you're participating in the PPP loan program, you are not eligible to participate for that payroll. You're not eligible to participate in receiving the credit. The credit is essentially 50% of the FICA that's being paid on wages that's going in. I will say there's another element as well that employers may want to be aware of and may want to consider, and that is the Social Security and Medicare that's being withheld on behalf of, no, I think it's just Social Security, I apologize, the Social Security that's being withheld for employees' payroll, you can defer making payments in on your 941 tax payments. You can defer making those payments until 2021 and 2022. Basically, you can defer half until 2021 and half until 2022. So that also gives you some available cash to be able to do some things, continue to keep your business in operation.
Yeah, important part about that, obviously, defer doesn't mean, loan, or doesn't mean grant.
That's correct.
It means you are taking on a liability, right? But
yeah,
the cash, it's a great way to, one more way, I guess, to maybe keep a little bit cash in your business. And that, again, would be reach out to your accountant to get more details of how that applies to your individual organization. All right, we've got Michael. He asked, I saw last week 2 larger banks were processing applications. Is this a first come, first served basis? I know smaller banks were holding off till today, such as my bank, with less restrictions concerning bigger businesses going to scoop it up. So basically, how is it going to work, Frank? Is it first come, first serve? And if we didn't get our application in, we're going to lose out? Are we with the right bank, wrong bank? What's your guidance for people that are in the application process right now? And how do you think funds are going to get distributed?
Well, there's no specific guidance about the specifics around how funds are going to be distributed. There's questions about, do you use an SBA? If you go to the preferred lender, do you use an SBA promissory note or do you use the bank? And those are all the technical questions that are out there. But to answer the question, yes, as of right now, it is a first come, first serve basis. But I know that Marco Rubio, who's the senator in charge, I forget the exact name of the committee that's talking about this stuff, is already talking about another tranche of money that would be available. But to be clear, right now the number is plus or minus 350 billion, and it is on a first come, first serve basis.
So no matter what the moral is, as soon as this webinar is over, if you haven't applied for the PPP program, reach out to your lender, find out if there's a next step that you need to be doing in order to keep your application moving forward. Absolutely, so we all can get in the first round of this. If I look, I got a question from Don. What if you're a sole proprietor HVAC company with no payroll and would still like to pay your business's bills with the money? Can that be done with PPP? I'll defer to, well, Mark's nodding his head, so okay, Mark.
Yeah, so that's gonna go back to the question that I had previously addressed. If you are a sole proprietor, you are certainly eligible to participate in that loan program, and the monies that you're going to receive are going to be based on your net income that you receive from that business. I just want to make sure, sole proprietor, so you're a Schedule C. So the concept there is much like every other employee that you would be paying payroll, it's capped at $100,000 per employee. So your calculation for the amount of loan for which you'd be eligible would be capped at $100,000. So if your business generated more than $100,000 of net income, you would take that $100,000 of annual income, you divide that by 12, that becomes your average monthly payroll, and that would be what you would use in order to apply for that loan. For the sake of discussion, anybody who is a sole proprietor, correct me if I'm wrong on this, Frank, but I believe sole proprietors cannot begin applying until April 10th. I believe that's the date on which they can start submitting their loan applications. Frank, would you concur with that?
Yeah, that's my understanding.
Okay.
Awesome. How about, there's been a lot of questions. So do I just reach out to my local banker and he takes care of me? Or do I go to the SBA's website to get my application started? How about what are we hearing out there that people are supposed to do as far as the application process? Myself, I've seen both. Frank, you keep mentioning smaller banks. Some of those are being processed on a manual basis. But if I remember right, Frank, and you could clarify, the financial institution that you work with has to be already a pre-approved SBA 7A designation bank. in order to process the payroll protection program applications. I guess at first, is that correct, Frank? And then besides a manual process, it looks like there's a lot of online applications, whether you're with the larger banks, the smaller banks as well. But if you can comment on that, that'd be great.
Yeah, so so the program is being administered through banks, and if you think about it, the banks are really just a conduit to get the guarantee money in the program administered via the Treasury and the SBA. So if you go to a preferred lender, yes, you can go through that. That's probably most advisable. But at the same time, my understanding is that banks, I forget, Mark, maybe you know, but pretty much a very broad category of financial type institutions are eligible to go up and to sign up for this program through the Treasury and the SBA in what I think is an expedited fashion. You know, as I've counseled people over the weekend and late last week and today, I tell them to do a couple things, and maybe this will help, maybe it'll frustrate, I don't know. But number one, again, the context I mentioned earlier, I think is really important to understand what's trying to be done today. I know that businesses are struggling. Some of them are day-to-day, cash flow to cash flow. You know, I totally understand and empathize with that. This is a big undertaking, and people are trying to figure it out. Number two, I'd go to the SBA website and look under the Paycheck Protection Program. They have a number of very helpful pieces of information. There's actually the interim final rule that does a very good job, I think, of detailing the program. It is 31 pages, but it's a pretty quick read and can help you get your head around how to calculate payroll and some of the generally asked questions. You know, this program is generally available for small businesses with less than 500 employees. And I think there's also on the SBA webpage is the actual application itself. So one, I think context is important. Two, figure out for yourself the best way to do the homework and to get understanding and prepared. Three, work with your accounting firm to help and ask them to help you figure out the calculation for how much you're going to put in the application. And the application is really driven on what is your covered monthly, average monthly payroll. Get that, and then go to your bank and make application.
Awesome, thanks, Frank. And I just saw a quick question on the calculation piece. Just to be clear, without going into too much detail, unless Mark, you think we need to, the loan amount is your average monthly payroll for 2012. So that payroll cost monthly times 2.5. So that is what you qualify for. So if your payroll was $100,000, ultimately the loan amount that you can request through the Paycheck Protection Program would be $250,000. Would that be correct, Mark?
Say that again. If your average payroll is 100,000?
A month.
Yes, that's correct.
Yep.
That would be correct.
You could qualify for $250,000. But the SBA form 2483, I think it is, which you have to submit as part of the application process, calls that out. As well as if you go to DeKalbCountyUnites.com, our website has links to a lot of that information as well. But feel free, you can click on the contact us on our website too and ask specific questions, and we'll get back to you as well on those. All right, I've got another question that says,
Hey, Cohen,
yeah.
Cohen, can I make one other quick comment?
Yeah, absolutely.
What we're finding out on the application is some people last week got out in front of this and went out and downloaded an initial application form. That application since the beginning of last week has been tweaked a little bit. So I really encourage you to go back out. If you happen to have found the initial draft of the application, go to the SBA website, go to DeKalb County Unites and find another one and use that one.
Yeah, it's been updated, yes.
Yep. All right, there was another question from John. Since I reduced shop hours, which is also reduced payroll below the 75% mark, in theory, can I write bonus checks towards the end of the 8-week period so my payroll is back up to the 75% mark? Mark.
All right, well, let me make sure that we're on the same page in understanding what we're discussing here. The 8-week period it starts on the date of the loan origination. So John, if what you're saying is that you will continue to have reduced hours and reduced payroll after the loan origination date, and then your question is, can I issue a bonus check at the end of that 8-week period because I have reduced hours during that 8-week period? Because again, we're specifically only looking at that 8-week period. We're not looking at anything that's happened up to this point. We're looking at that 8-week period. So if you continue to have reduced hours during that 8-week period, and your question is, can I issue a bonus? My response is going to be, is that eligible payroll? My response is going to be, I believe it would be. However, you probably need to discuss that with your lender, because I can't make lending decisions with respect to that portion that can be waived. It would be my belief that you're upholding the spirit. You're upholding the spirit of the intention of this act. The spirit here is to continue to keep people employed and continue to keep people paid. If you are issuing a bonus check with the intention of getting those people some money for which they could have been eligible, and now you're giving it to them, for me, it appears that would fit within the spirit of the act. But again, I can't speak for how the lenders themselves will treat that.
Any additional comments, Frank?
Not at this time, no.
Yeah, we've got a bunch of questions coming in still. Okay, so being a union-oriented company, we pay out monthly union fringe benefits for our employees. Are the costs of these benefits considered payroll costs? Mark?
I don't see anything in the definition of payroll costs that specifically calls out union benefits. I do see things that refer specifically to health benefits. I do see things that refer specifically to retirement benefits. If the union benefits to which you're referring fit in those categories neatly, I think we're fine. If it doesn't, I can't speak to it at this time. There's still a lot of information that's coming in that we're trying to decipher as we go and trying to figure out exactly what payroll cost means. In my opinion, I believe that would fit with the spirit, because it's part of the cost that you're incurring of employing of keeping your people employed. So to me, it fits with the spirit, but I don't know for certain that it meets the criteria that was written into the CARES Act.
You know, that's great. So thinking of spirit, right? So if I apply for this loan, let's use that $100,000 monthly payroll example, and I get $250,000 as a loan to me. I put that in a bank account. As I use that towards payroll or whatever it is, right now that $250,000 I received is kind of an educated guess on what payroll costs are. But later on, the verification of what's forgiven, that's where I have a feeling that it's going to be a little more intense on the prove process, what is actually forgiven as part of that loan. Would that be an accurate statement, you think?
Yeah, keep in mind too, I would say yes, I'm in agreement with that. Keep in mind too though, Cohen, that calculation is 2.5 times your average monthly. 2.5 times means 10 weeks, right? So if we're only looking at an 8-week period that we can reference, and we're getting a loan to cover 10 weeks, there's excess. So the intention there is the excess is supposed to help you cover rent. The excess is supposed to help you cover utilities. The excess is supposed to help you cover your mortgage interest that you're paying during that period. There's no perfect calculation there, so it's entirely possible that a portion of that loan isn't forgivable and you have to pay it back.
Okay. We got Lori asking a question to clarify the average monthly payroll. She's asking, is it for calendar year 2019 or is it the last 4 quarters? Because on all the applications that I've filled out, I'm getting conflicting requests. They say last 4 quarters. Well, we're in Q2 of 2020. So does that mean Q1 of 2020 and then 4/3/2 of 2019, or is this for calendar year 2019? So could either of you give any guidance on what payroll number are we supposed to be basing this off of? Frank, I'll let you go first.
I'm actually going to defer to Mark.
Okay.
So
I'm not trying to, here, let me just clarify real quick. I'm not trying to punt the question, but again, these are really good questions for you to work through with your accountant. My general advice with the people I've worked with is just take it for 2019. But Mark, if I'm wrong, let me know. I'll learn something. But that's it. Again, work with your accountant to determine that number.
So ultimately, it's a great question. And the reason why it's such a great question is because the CARES Act actually specifically stated it was a 12-month rolling period. So under the CARES Act, we're supposed to be providing that data under a 12-month rolling period. Unfortunately, when the applications came out, and even the subsequent modification to the applications that came out, Friday or late Thursday, they still on the application state that you're to use 2019 figures. So I think that's unfortunately right now it's an unresolved issue, and we're going to have to defer to each lender with respect to what they're seeking. Some lenders are seeking the rolling 12-month average. Some lenders are seeking what it says specifically on the application, which is 2019 data. So I will defer to each lender with respect to what they're seeking. Ultimately, the lenders need to be comfortable in the numbers that they're getting, and so we need to provide them with the accurate data that relates to whatever they need in order to secure those funds.
Okay. Hey, Frank, I think I got a direct question for you. The question is, do we have to apply through a lender where we have our business account? So a perfect example, I think, would be I reach out to my lender. They're not an SBA-approved 7A. So I want to go to, let's say, First National Bank, and I want to apply for the Paycheck Protection Program, but you're not where I bank. So how could I engage with a bank that's not where I primarily have my business accounts? How does that work?
Well, every bank's going to be different. Some banks are going to say anybody can apply. Some banks, in order just to get through the pipeline, are just going to say, you need to be a commercial deposit customer or a commercial borrower, and that's where it's going to start. Every bank's going to be different.
Yep. Yeah. So just reach out to the financial institution you're thinking of and find out what their requirements are. One of our last questions coming up here is from Diane. If we apply for an SBA loan, PPP or EID, can we still apply to receive the Illinois Downstate Small Business Stabilization Program? And are local lenders handling the state program? So to answer the first part of the question, I think you can apply for the PPP, EID, any other SBA loan. There's some qualifications between like those three, what you can and cannot apply for. But if you apply for them, my understanding is you can still apply for the Illinois Downstate Small Business Stabilization Program. I don't know if either of you have any insight onto that.
I don't.
Okay. Mark?
I don't, aside from just the knowledge that we need to make sure that the funds are being used for their intended purpose. So when we start receiving funds from multiple sources, it gets tricky, and we need to make sure that we continue to account for those funds properly and that we're not overlapping, because we can also become in violation of the loan agreements if we're not utilizing those funds for the specified purpose. So be very careful when you're applying for multiple loans. That would be the only suggestion I would recommend in that case.
All the more reason to continue to reach out to your accountant and make sure that you are processing everything as accurately as possible. And then the last one, Justin is asking, can any part of the EIDL be potentially forgiven too? My understanding is that $10,000, yes, that initial $10,000 within 3 days supposedly into your bank account. But Mark, I don't know if you can give any insight if the EIDL loan, let's say you borrowed $100,000, how much of that could be forgiven?
Okay, so under that EIDL program, only the $10,000 can be forgiven you can roll EIDL funds into the PPP program. And that's actually now on the revised application. You'll see that there's a section on there where you can indicate how much you're rolling into the PPP program. But ultimately, only $10,000 can be forgiven. Please note, though, with respect to that $10,000, I believe that $10,000, though it's forgivable, is included as taxable income. It needs to be reported as taxable income on your income tax return, whereas funds you're receiving from the PPP program are not. So if you receive funds that are completely forgiven, or whatever portion of the funds are forgiven through the PPP program, that is not includable as taxable income. So it's money that you receive, you never have to pay tax on it, that portion that's forgiven.
Awesome, thank you. All right, before people check out of the webinar, really quick, I want to share a couple more things with you, just so you know, because there's more value coming. One, don't forget to go to DeKalbCountyUnites.com and check out the information we have there, including a really cool spreadsheet that breaks down the different programs, and some of the questions that you're asking were already on there. So it's a nice reference sheet for you. That's DeKalbCountyUnites.com. I also want to thank Courtney. Courtney was in the background processing all the questions and keeping us on track. She's with the DeKalb County Convention and Visitors Bureau. Courtney, you were awesome. Thank you so much. We also, I mentioned Monday, Wednesdays, and Fridays at 2 o'clock. Every Monday, Wednesday, and Friday, we have additional webinars coming up. This Wednesday, we're going to have small business adjustments, wins in the tough times. And we've got the Open Door Coffee team that are going to come on and talk about how to stay current, stay relevant during this time. And if you don't follow them on social media, they're doing a lot of really cool, innovative things right now. So I highly recommend you check in. Whether you're in retail or not, or however it's being affected, I'm learning so much by all the businesses out there that I can apply to my own during this time. So definitely tune in. And then on Friday, we have a restaurateur's guide to keeping the orders flowing. So we're going to have Jeff Dobie and Bill McMahon on from Fatty's and from the Lincoln Inn, sharing all the insights and knowledge that they've gained on how to be successful during this time, transitioning their business from dining in to pick up and dining out. So it's going to be great. I also wanted to thank Mark Kerman with Seifert & Company, a local accounting firm, and Frank Roberts with First National Bank of Omaha, one of our local bankers, for taking the time today, gentlemen, to be on here to answer all these questions. I want to remind everyone, these are all volunteers. I'm a volunteer. Everyone with DeKalb County Unites is a volunteer. And these two gentlemen volunteered their time graciously to come on and try and get some answers to us all. We as a group will be going through all the question and answers. We'll try and get as many of them we can posted on our website, so they'll be there in the future as well. And that's all I got for you. So go to our website. You can find out the next webinar, register for the next webinar. And until then, you all just keep working hard, keep getting through this. Know that there's a lot of us out there that care about you, that are supporting you, and we are all in this together. So that's it, DeKalb County. Have a wonderful night now.